FFIE making the upside that we were absolutely looking for. We actually called the bottom area here, and we looked at a potential resistance range right between this area here. It has since happened, and what is going to happen with the price action following now? So let's go ahead and find out in this video. What is up, you guys? This is ARCa coming at you with an FFIE technicals, raw price action, and statistical threat of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community called ARCa in Discord. With that said, let's dive right into the charts. Okay, so we're looking at FFIE in the hourly chart here. We're going to start off with the immediate short-term time frame with the ARC-Series Crypstex indicators, which actually came in very much, as they say, clutch. Okay, so we actually did call a good upside, and it did happen. Okay, congratulations to those who took the positions. I am very happy for you. Okay, so now let's go ahead and verify exactly what's going to happen. First of all, let's go ahead and look at the cumulative score based on the ARC DBSI indicator, which actually takes statistical average of all of the candles presented throughout the entire trading history in the hourly chart for the FFIE asset and gives us a score here based on a percentage. So bears at a 43%. Now the bulls are in the deep areas of the 50 percentile, which is very bullish still. So now another good thing is that the DBSI indicator gave us the buy signal right down here at the opening of this candle, which was at about 25.04, 25 cents. It has since moved to 45 cents since the indicator actually gave us that buy signal right down here. So these indicators are available to you. Just make sure to send me a DM and I'll go ahead and go over the details as to how to acquire these indicators. Okay, so now let's look at the enhanced MACD, which actually gave us a little bit of a more conservative entry. So it actually gave us the entry at about this point right here. It was still within the 25 cent zone. So the bull signal has still it's still fired off, and it's still going and going above, and it has not since looked back. Okay, so for the immediate short-term time frame, however, there could be a pullback, and that is, it's natural per the laws of physics, and also take profit zones. Just it can be as simple as that. Okay, so in this area here, you can see that the 30-minute candle is printing very much red. It has not returned anything from which it has lost already. So this can potentially lead to a continuation to the downside, potentially to the 10-day simple moving average right at about let's see, 43.52, 43 cents. I actually did this a few times already. Let me make the numbers larger for the people who are viewing things on the cell phone, as somebody did make a comment on that just the other day. I appreciate the feedback. Thank you so much. Okay, so yes, we're looking at a pullback to the SMA 10 at about 43.58, 43 cents. So we're still at 45.35. So yeah, this can likely be an area for a quick pullback before a continuation. Okay, so now let's pull up the ARC Armor indicator, which is also another Crypstex indicator that can be available to you. Let me hide or actually pull out the enhanced MACD, the ARC enhanced MACD, and also hide DBSI. Okay, so let's take a look here. We are firing a short signal here for the ARC Armor, and it hasn't given us. It actually still hasn't printed a long signal here to continue to the upside. It's still honoring the short signal. So let's go to the hourly and see if it has done that still. Actually, the hourly is still suggesting upside. So this is very curious. So there could be, yeah. So there could be a potential just pullback again. So 43.69 to the exponential moving averages that are within the ARC Armor is very much in confluence with the 30-minute SMA 10, I believe. Let's see, where's that SMA? Let's hide Armor and let's just make sure that it is there. Yep. So the SMA 10 is right here at about 43.50, 43.58, right? So let's look at the Armor exponential moving averages at this area here. So it's looking at 44.88 to 44.20. Let's see. Okay, so 42.92 would be an area of relevant support as well, according to the ARC-Armor indicator. So let's go ahead and move on to the next chart to see what we have. This chart is actually very important. This is where we were able to put our targets in place. So we are looking at a descending broadening wedge right here. So this particular formation is a bullish reversal of trend. Okay, so we usually, when we see these formations starting to play out, it means that price action could likely be ready for a continuation to the upside following future sessions, of course. So we're following the golden rule of three, which is usually something that we talk about here very often. Okay, so we're looking at potentially test number 1 right here, test number 2, we have test number 3, and this is now test number 4. So now, just in case this isn't test number 4, we do have a backup. Okay, so we do have, or we do have to think about potentially, the mass sentiment not counting this red candle as a test number 1. So we can actually see test number 1 here. We have test number 2 here, test number 3 in that tiny little candle, and actually use this red candle to verify that it is a breakout test. So we do have 1, 2, 3, and now another one right here, which would be test number 4. So upon the test number 4, usually we would likely move above the newly converted, or I'm sorry, we would move above the resistance. In this case, we actually rejected it, potentially because we just made a massive move to the upside. So let's just go ahead and see exactly how large that was, as I am curious here. So let's see, 212, this was the candle starting actually right here. So the closure of this candle, which you can see right up here in these metrics, the closure of that candle was on C, 29.50. So 29.50. We're gonna have to. Okay, yeah, right. That should be good enough. Okay, so we'll go up and let's see how, yeah. So we pretty much moved an 86% move to the upside and closed at a 52% gain, which is just massive. So I did mention that this was a very, very likely area to find some resistance and or support yesterday, which I signaled from down here. Okay, so what's happening right now is that it definitely is using a geometrical formula of trading. Okay, so we used the 4-spot 618, surpassed it, and eventually touched our 4th test here of the resistance from the wedge, came back down, and we are now using the 3-spot 618 alongside this, alongside what was called, I think this was actually our top target for our statistical target, which we're going to verify just in the next chart. Okay, but the important thing here is that we're using our resistance range as now a form of support, alongside having the 3-spot 618 at 44.11 as a valid form of support as well. Okay, so now let's move on to the statistical side of the analysis as this played out exactly the way we were looking at. Okay, so what new listeners, new viewers, what you're looking at here is volatility, represented by this indicator BBWP. Volatility is direction neutral. We pair it with an indicator similar to this one here, which is called stochastic momentum. It is a momentum-based indicator, and I have ran back tests of just this indicator alone in several tickers, and it has given me a hit rate of about 75 to 91% in guessing the asset's direction. So it's not perfect, but it's very good to consider for our probabilities, okay? So we were actually looking at a back test that consists of any time that volatility has expanded into critical volatility, which is anything above this red horizontal line, anything within that 90 percentile. We've actually taken, I've actually taken an iteration or note of that iteration's duration, the upside thrust based on that iteration, and also the amount of times that volatility versus momentum profile have guessed the upside correctly versus incorrectly. So in that backtest, of which I actually perform by hand in the 4-hour chart throughout the entire trading history of FFIE, pardon me, we actually came back with some very interesting metrics. And And those metrics are these right here. So out of a total 11 iterations, 7 were guessed correct to the upside, giving us an average upside accuracy of 63.63% with an average upside thrust of 28.998% over the span of just 7.5 days. This is proof of work. Okay, so since the firing of the signal, which was actually at this candle here, just this candle right here, which was, I'm sorry, it was actually right at this candle closure. So the closure was 35.75, which is right about this area here when we started making our pivot towards the upside. So the signal fired here, of course, it went down, but the signal fired from this area, giving us a 28.98% move to the upside, which I actually took and measured from here, and I drew a green trend line here to signal where we're likely to stop. Okay, so if we can just zoom in, remove the indicators here, and take a look. Our candle, I mean, we're come on, you guys. I mean, ARCa deserves a sub here. Okay, make sure to subscribe to the channel, hit the like button. That's all I want from you. Say hi to me, okay? So the statistical metrics proved to be pretty accurate in this situation. Of course, we overshot it, but you can see that based on the stats, price action is respecting the statistical average, which actually landed right in confluence with what I mentioned before, the 1.618 at 46.19, 46 cents, I believe. Okay, so damn, it's just, I have to just do this to every single chart. My apologies, you guys. So like this thing is what I'm talking about, just to make these numbers bigger for you and for me, since my screens are like literally just so far away from me. All right. So anyway, let's go ahead and move on to the last part of the analysis, which is actually the RSI, another momentum-based indicator. It is important for us to take a look at or take into consideration our momentum, you know, because it is of incredible importance that we understand the direction that the asset is moving in. I'm not holding a crystal ball here, you guys. What I am doing though is that I know the rules to the playbook. I know the rules to the game, you know, so this gives me an edge above other traders that are not as savvy, you know. So just like in any game, if you know the rules in soccer, if you know the rules of football or whatever it is, then you're gonna, you know the game. You're gonna potentially be successful at either betting on the game or playing it. Okay, so in this case, I just know a few rules that are you know, very important to the trade. So first of all, we do have to note that we now have a psychological component applied to the trade, so which is this gap right down here. I'm not saying that we're going to go down there. What I am saying is that it is a psychological component in the event to where price action does go somewhere near this. So if we start approaching it, then the likelihood of us being gravitationally pulled into this area, physics will absolutely play, and we would definitely outweigh the numbers and into favoring the bear side to coming down to here. It's actually a very natural law. Okay, so why I pulled this up is because, first of all, yesterday we did, in the analysis before the massive pump to the upside, we did notice 3 drives of bullish divergence. So in this case, the drives of bullish divergence were created when price action is making a lower low and the momentum is making a series of lower highs. So in this case, we did see 1, 2, 3 drives of primary regular bullish divergence, of which played out very nicely. Okay, so I'm pointing this out because there is a new drive printing right now, and it looks like there could be a confirmation already set. However, this isn't the first one that's going to happen. It may actually still look for some more upside, but the 12-hour RSI has already pivoted, thus confirming our first drive of hidden bearish divergence. Okay, hidden bearish divergence now happens when the price action is making a lower high, when momentum is making a higher high. As you can see, this is the divergence between them. Okay, so we definitely have this drive happening right now. We have to watch out. So the thing is that this may have already played out. Okay. Well, sorry guys, I don't know. The phlegm from my milk. Excuse me, just a sec. All right, so yeah, I can see the potential of this already having played out, but we need to verify that with more price action. So just in case, if you're curious, Divergence is the opposition of price action versus momentum. Momentum in this case represented by this indicator RSI, which is relative strength index. It is a typical setup. We do have a 14-day moving average, simple moving average actually to be precise, and we do have an RSI signal here. So when you hear the difference between simple moving averages and exponential moving averages, it only means that the moving average follows a little closer when it's exponential, meaning closer to the price action. Simple moving averages are just an average of the momentum. Okay, so it doesn't actually particularly look to the smallest of details of movement when exponential does. Okay, so now let's open up a multi-pane for the RSI so we can gauge a bias for direction starting from, we know what, we'll load the 30-minute like we always do. So yeah, we'll load up the 30-minute immediate short term. Okay, so for the new viewers, I have a diagram set out right here for you. So these are the RSI properties, and these 4 zones are primarily the zones that I would like for you to focus in on, okay, as they're located right over here. Okay, let's make this a little smaller and start. Okay, so immediate short-term time frame RSI has made a bearish cross below the moving average, and it's suggesting a continuation to the downside. However, I have mentioned this largely, okay? As long as we're not within the shallow areas, okay, which is usually about, let's see, you can consider this to be about 63%. Okay, 63% to the 60% of the percentile within the bull strength percentile would be that shallow area, okay, which usually means that we're going to face a likely gravitational pull back down to the opposing zone. Right now, we're well within the grips of the bull strength percentile. However, we do have the moving average above us now, so there could be a continuation on the way down for the immediate short-term time frame. So this is likely to play out kind of fast. Also, the 15-minute micro time frame is right at the junction of the bull strength percentile and the bull weakness percentile. It looks like we're about to use the moving average as a form of support. So again, while we're in this case, the weakness zone, this is the deep areas of the weakness zone. So as long as we're in the deep areas of the weakness zone, then we can likely be gravitationally pulled right back into the bull strength. Okay, so now let's look at the bi-hourly. So bi-hourly is retracing from an overbought percentile here, and it is creating this this lower high structure. The good thing is that we definitely have the moving average right down here, which means that we can potentially retrace back just temporarily to find the support from the moving average before a continuation onto the upside, which can likely happen as a rejection from the bull weakness percentile before that bounce. Okay, so now let's look at the 6-hour RSI. Let's zoom in. And okay, 6-hour RSI has barely has a pivot to suggest to the downside. That pivot, I can't give it too much credit here, but the thing is that it is in the shallow areas of the overbought percentile, which means that it's likely to come back down into the bull strength percentile. So there could be a pullback tomorrow as far as tomorrow, Thursday, mid-session, maybe tomorrow Thursday. I'm saying tomorrow mid-session. That's what I'm trying to say. Tomorrow, Tuesday. So now in the daily chart is where I'm the most bullish on, which actually backs our thesis. Sorry, this is the 5-day right now, but let's so the daily chart is where I'm laying the most bullish on. There you go. So we had to see this the right way. So as you can see, the daily chart has now crossed all of the bear control zone and has now entered the bullish control zone, and we're now smack in the middle, or actually slightly above. So this is well in the grips of the bull weakness percentile, which means a continuation to the upside is very likely. So we can potentially look at some sideways trading to a retracement, a short-term pullback to find support, which can be within this area here. we can actually be forming some type of sideways trading before a continuation to the upside, realizing the suggestion from the daily time frame. Okay, so now let's look at the buy daily to see if it has the same suggestion. Buy daily now crossing in to the bear weakness percentile. It is still, however, within this shallow area, or now in this case, it would be the deep area of the bear weakness percentile. So this is a pretty aggressive pivot, so I can actually give this some credit. It may not actually retrace back down into the bear strength percentile. Okay, so let's look at the 3-day. It should be in the bear strength. Yeah, so 3-day has now has actually made a bullish cross above the moving average, and it's now sitting in the shallow areas of the bear strength percentile. This is likely to be gravitationally pulled right into here. This multi-day upside is very much in accordance to what we're looking at within this wedge here. Okay, so we can look at a short-term pullback, some sideways trading before continuing on into the upside, finding a true breakout out of this resistance and coming back to confirm this newly converted resistance into support. If we're looking at the more macro high, per the playbook rules, okay, remember what I say because there's too much confusion within this. Per the playbook rules, the highest target that we can find lays at the genesis of the formation itself, suggesting $1.17. Okay, so if we can actually make that move to the upside, since, I mean, you can actually see that FFIE is absolutely capable of making that move per these candles here. We have massive thrusts to the upside, so it is possible. Okay, so FOMO would essentially play out with the math and continue its path to the upside. So the statistical average has already been made. Okay, so from this point on, we are kind of like, what's going to happen next, because now stochastic momentum looks like it's slowing its pivot down just a little bit, which is confluent to what we're talking about within the daily, within every other time frame. So please remember that this move was a very short-lived move because I measured it. I ran a backtest on a 4-hour. I usually run back tests of momentum versus volatility in higher term time frame. Okay, so in this point, let's see if we can catch upside target based on the position that we're in right now. Okay, let's do that. So swing high from today. Yeah, we can, man, that's all right. Swing high from today to the swing low. Okay, so already very curious. So I did mention that the target for the top is $1.17, which has direct confluence with the 3-spot 618 at 114, almost 115. So now that gives us resistance range. We're going to go ahead and draw it for the future iteration, just like we did yesterday for that top target that we were looking for, which we eventually met. Okay, just like here. Okay, so now I'm drawing it up here, but I'm not saying that we're going to go there tomorrow because I already gave you what's going to happen tomorrow. Okay, so this can likely take some time. We're in the 4-hour chart. This can be a multi-day move, like I said. Okay, so if we're looking at a retracement first stop is likely to be between the 0.5 at 43.63 and the 0.382 at 40.94, just about 41 cents. The good thing is that we're well within the golden pocket, which is located between the 0.382 at 40.94 and the 0.618 at 46.32. This is a very bullish statement for FFIE. So, yeah, we can find a bounce soon here and then continue on to the upside with a positive thrust with FOMO applied. We can make it to the 1-spot 618 at 69 cents. Okay, I'm going to draw that trend line there just as a top target for now. If we do get a push to the upside with psychology backing it, okay. Other than that, I can actually see more of a natural test between. I know this is kind of a large margin, but between the 0.786 at 59 cents to the 1-spot 272 at 61 cents. I know that's a 10-cent resistance range, but that could be likely an area for us to find some type of resistance and support. So meaning that we can go up to the 1-spot 272, retrace back to test our newly converted resistance into support, which is in confluence with, first of all, the 4-spot 618 from yesterday's range and the 0.786 right at 50 cents. before continuing on to the upside and realizing the formation's price objective. Anyway, I think this video got a little too long. Please know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as a form of entertainment only, okay? Please do your own DD and we'll be okay, you guys. All right, so if you feel compelled to reach out to me, make sure to visit the links that I have in the description below. Consider joining the ARCa trading community, lots of good people in there. And visit me on Twitter. I have lots of followers there too, always asking me questions, DMing me. I try to answer as much as I can. Don't fall for the scams in the comments, okay? The ones that say WhatsApp B. I don't have a WhatsApp. I'm never going to message you first, okay? So I'm never going to ask you for your money like that either. Okay, you guys, so unless you want the Crypstex indicators, then I'm not going to answer. I'm just kidding, you guys. Another thing is that the TradingView affiliate link is down below as well. If you'd like to sign up, create an account on TradingView to trade like me, that would help me out greatly as well, you guys. But with that said, I think this is a pretty good place to leave off the video. If you have, yeah, that's about it. All right, you guys, thank you. I wish you well. I wish you a good night, and I will catch you at the bell mañana. Adios.